Welcome to Parks Insurance Agency, where we don't want you to just get insured, we want you to get Parks insured. Thank you again for taking the time out of your day or your evening to watch us here on YouTube or on my website if that's where you are or where you're watching this. Really appreciate that. I'm Aaron Parks, president of Parks Insurance Agency, and we're going to talk about today is life insurance, okay? That thing in the back of your mind that you know you should do, that you just either A, don't know where to start, or B, know that you should do it and just don't like to talk about it, which is understandable because nobody wants to talk about their demise. However, as I always say, guys, life insurance is the most unselfish act that you'll ever commit in your life, because it is about your loved ones and the people left behind versus the benefits of yourself, obviously. And unfortunately, we all know one thing is for sure: we're all going to die. And so that's something that we need to address as soon as possible and get it behind us. Address it, and then you don't have to think about it again. And that's the hope, and that's the hope that we're able to stop these GoFundMe pages and these different things that come out. That's really, really unfortunate to see these families in these situations where the wife has lost her husband and is left behind with the kids, or the husband has lost the wife and is left behind with the kids and the debt and all of that kind of stuff. So what we do here at Parks Insurance Agency is we specialize in making that an affordable option for you. Okay, we want to make this something that feels comfortable to talk about, something that you can feel good about when you lay your head down at night and know that your family left behind is in good hands and that they're safe and they're healthy and they're happy and everything is at least okay that way. It's bad enough if they lose you as a family member. You don't want to leave that burden behind on your family. So let's talk about some of the solutions of life insurance and how it's a little bit different here at Parks Insurance Agency and some of the things that we do. So the first thing I'm going to talk about is the difference between term life and whole life, okay? A lot of you out there probably have a term life policy. If you have a very inexpensive premium, more than likely it's a term life policy. And those are not bad things, right? There's a time and a place for a term life policy. There's also a time and a place that it's not appropriate. And I'm going to be here to kind of define and help guide you through that jargon and what that means and when it's appropriate and when it's not appropriate, okay? So the term life sounds just like what it is, okay? It ends at the end of a term. So you can get a 10-year, a 15-year, a 20-year, 25-year, or 30-year term. And what that means to you is if you get let's say you get a 10-year term, if you don't pass away in that 10 years, then you get nothing at the end of that term. Okay, you don't have any insurance after that. You don't get anything after that point. If you pass away within that 10 years, your beneficiary gets the death benefit in that time frame, obviously because you passed away within those 10 years. All right. Now, I'm not a big fan of term in most cases, just simply because I think there's a better use of your money. All right, personally. When you consider especially your age, and that's a big factor. If you're on the younger end, I really think it's a good idea to look at whole life, but we'll get to that in a second. But if you're on the other end of it, where you're a little bit closer to retirement, term can make sense in a lot of cases. Okay, because what term does, or what term can do for the folks that are closer to the retirement side of things in the 50s to 60-year-old frame, you can look at, up and until you get to retirement, covering that liability, okay, covering that risk, if you will. Now, you may have a certain amount of risk up until you get to retirement age. Let's say your risk is, your exposure is $100,000. Maybe you just want to put a $100,000 term if you're age 55 and you're going to retire at age 70. Maybe you just want to stick that 15-year term in there, and maybe cost-wise that makes more sense than a whole life in that scenario. But I will help guide you, and like I said, show you the different options where it might make sense for you to go that way if that's the case. Now, we prefer, especially for the younger crowd, the folks that are further away from retirement, whole life plans. And whole life sounds just like what it is. It's whole life. So whether you're 120 or whether you're 35 or 25, it's going to last until you pass away. whenever that may be. Now, the difference with our whole life plans that we like to show you is that they don't change. And what that means is, guys, the death benefit, if it's $200,000 today, it's going to be $200,000 when you're 110. Okay, it doesn't change. The monthly premium does not change. So if it's $100 today, it's going to be $100 when you're 110, which I really, really like. Now, the plans that we feature and that we like to sell the most for our clients is called an IULE through Mutual of Omaha. Those plans are called Index Universal Life Express. Okay, these plans are excellent. All right, because of a couple different things. So it has those two aspects in it where it's a fixed amount of premium monthly, and a fixed death benefit no matter what. Now, the IULE, what makes it a little bit different is because it does accumulate cash value just like a traditional whole life does, but it does it at a much higher rate. So a traditional whole life plan, guys, will give you about between 1% or less, 1% or less yearly in interest as far as off of your premium that you're paying in. Okay, an IULE gives you 5 to 7% on average yearly. Okay, in return, and what that does for you guys is it accumulates cash value. Okay, right next to your death benefit. So let's say your death benefit is $200,000. Okay, and then right next to it is a cash accumulated value that you're gaining each month that you're making your payments. Okay, and so what happens is this cash value builds up. All right, so let's say after 10 years you got $25,000 in that tax value bracket. Okay, that's built up. You're able to access this money at any age tax-free, which is unbelievable. Okay, you're able to pull this money out and you're able to use it tax-free however you want, no matter what. And then if you leave $1 in there, you're still able, to have your death benefit still intact. So it's a beautiful thing. If you have $25,000, for example, you need $24,000, you pull $24,000 out. Okay, that you can use that $24,000 however you see fit, tax-free. Doesn't matter how old you are, and that's why I like these IULEs so much. And you still get to keep your death benefit there, and then you're able to build back into the policy if you want to continue to build it up. Also, it has living benefits. If you have a critical illness, you're able to get the cash accumulated value and a big portion of your death benefit while you're still alive, which is pretty amazing as well when you consider, if you do have something terminal going on, it's nice to be able to draw off that money to kind of help with your treatments or whatnot. Or, if you just want to have a little extra money there for you and your family, you're able to do that as well. So this is an unbelievable plan, especially for the folks that are further away from retirement, but even the folks that are closer to retirement that want to utilize this product. This product is available up to, I believe, age 65. So we're able to assist you there. And then there's other companies that I'm able to get you this same product up to like age 80, which is really good. So if you want to utilize this product, it is there really for all ages. But it works most effectively, obviously, if you're further away from retirement, because that gives you time to build up cash value accumulation. And of course, the premiums are significantly less when you're on the younger end. Now, you would be shocked, guys, if you're able to get a free risk assessment. Click the button there and definitely schedule your appointment for a free risk assessment. I can get you some pricing, but the pricing is pretty amazing. It doesn't really cost a whole lot. You're looking at, especially if you're on the younger end, you're 25 or so, you only looking at $25-$30 a month or something like that, and depending on what your death benefit is. But we'll get into all that, but it's definitely more cost effective than you think. So definitely join us. Click that again, free risk assessment there, and definitely check us out, man, and get the opportunity. If you're watching this solely on YouTube, down in the description box below is the Calendly link for Parks Insurance. You click that, choose your appointment time, and definitely we'll get on there with you and discuss it. We'll show you everything. It's really, really risk-free, and it's a great opportunity to kind of get an idea of where you are. I mean, if nothing else, you can get an idea of kind of what is my exposure, what is my risk for my family if something should happen to me or my spouse or anything, right? And you want to make sure that you have that protection in place so that at night, you can rest easy. So thanks again, as always, guys. Appreciate all the support. If you have any questions for me, please feel free to reach out. And again, schedule an appointment with us. We're so excited to assist you any way that we can. And we know this is a sore subject and something, again, that a lot of people don't want to talk about. But there's life insurance programs for everybody across the board. It doesn't matter your health. So definitely we can help everybody, even if you got an active condition going on. Definitely check us out, and we will assist you any way that we can. So thanks as always, guys. Appreciate all the support. And I will talk to you again really soon. Take care.